Welcome back again on computerized accounting. I hope you remember the previous session on types of transaction, and I asked you to write it down: incomes, expenses, assets and liabilities. Today we will know a little more about accounting as a discipline. When you look at as a discipline, the accounting transaction, when you do a transaction, all the transaction has got two effects. Let's say I am buying goods, I get the goods and I pay the money. These are called dual aspects of accounting transaction, business transaction. When I am receiving some money, I am giving in return something. So there is a give and take happening. Now on that basis, the accounting is divided into three aspects: personal, real and nominal. And there is a golden rule, and as per the personal account, debit the receiver, credit the giver. As per the real account, debit what comes in, credit what goes out. As per nominal account, debit all expenses and losses, credit all incomes and gains. Now when you say aspects of accounting, the three types of account: personal, real and nominal. Personal means, what do you mean by personal account? Any person or person representatives are called personal account. Now for example, I am selling goods to an X person, Mr. John. John is a person. I have sold goods, that is real. I can touch and feel and see. He has taken the goods. Credit what goes out. Who is the receiver? John. John is a receiver, debited. So debit John, credit the sales. So that is the accounting principle. When I look at all the sum total of all the personal account, these are called debtors and creditors. They will be termed as debtors and creditors. When you look at all real, which you can touch and feel, these are assets and liabilities, tangible ones. And when I say all nominal, which is name, there is nothing special about it. There is a concept. Let's say for example, sale, salary is a concept. Salary is a concept, a remuneration paid to a person who has worked for a month, that is called a salary. So concept, that is nominal, which will come into all incomes and expenses. Now when you look at a financial account statement, nominal account, we are comparing incomes and expenses, whereas we compare assets and liabilities in a personal and real. So when you look at in a different manner, assets always will be debited when it is coming in or increased. Asset is decreased or going out will be credited. Expenses will be debited. Debit all expenses, losses, the principle is saying. Liabilities, one who is giving the money has to be credited. Now revenue is an income, has to be credited. So when you look at it as income and expenses, or in the form of personal, real and nominal, in both the cases we are recording the transaction both the side. I told you, when I am selling the goods, it is sales. I am receiving revenue. My goods are going out, or I am receiving cash. Cash is debited, sale is credited. When I actually record, when an accountant record, there are basically 6 books of accounts are there. One is called a cash book, another one is called sales book, purchase book, sales return, purchase return and journal. Let's look at it. When you are accounting in the Tally or any software, what is a cash book? Records all types of cash transaction. Whatever money you have received, whatever money you have given, whatever purpose, whether it is for this year or last year, for next year, I have paid in advance, everything will come in the cash book. Whether I am purchasing assets or whether I am buying goods to sell, all will come in. Whether I am taking a loan or selling the goods, it will come. All types of cash transactions will come here. All types of credit sales. I have sold goods not on cash, at the understanding that it will be paid later. Same way, all purchases which are done for resale, but I will be paying the supplier later, it will come under purchase book. Same way, if the credit transaction is returned, I sold the goods but it has come back. So, sales return book, I purchased the goods but I have returned. In that case, purchase return. Now, if it is not mentioned in any of these 5 books, this will come in the journal book. Now, what are the transactions that can come in journal? The journal means non-cash transaction of sales or purchases. Here, if it is a non-cash transaction, if it is a sale, it will go to sales book. If it is a cash transaction, non-cash purchase, it will go to purchase book. But I am purchasing an asset which cannot be put under purchase book because it is not for sales. So, it will go under journal book. Now, I am doing any adjustment, errors or adjustment or a year-end transaction or year opening transaction, then it will come in the journal book. Now, what we have done today, basically, we have seen recording of cash and credit transactions. How cash and credit transactions are recorded. Cash is coming in for some purposes. I told you the purposes can be only 2. When the money is received, either as an income or a liability. Money is given either as an expense or an asset. There cannot be any other purpose. So, this has to be recorded. We also seen from one angle the types of accounts are real, personal and nominal. When you look at it the other way, income, expenses, assets and liabilities. Now, primary books already seen: cash book, sales book, purchase book, sales return, purchase return and journal book, where cash is recorded. All cash transactions are recorded in the cash book. All credit sales are recorded in sales book. All credit purchases are recorded in purchase book. When I say purchases, here purchases, the understanding in business, purchases mean purchasing for the purpose of resale. I am getting something to sell it, but I am not going to keep it. That become an asset. That is not a purchase. These are called the primary book. If you have further doubts, you are most welcome. Now, what you have to do as part of it? The purpose of each of the subsidiary book. What is the purpose of each subsidiary book? Just list it down. Actual real transaction. Let's say I am purchasing some pen and pencil for the stationery for the office. Where will I record? If I am making immediate payment, it will come under cash book. Like that, you prepare a table where you mention, okay, which book it will go, how it will go. This will help you to enhance your learning further. Thank you very much.